Are you trying to figure out your salary for your business? I'm going to help you walk through that. Let's get into it. Hey there, this is Tiffany with Boss on a Budget. So I help people navigate their launch journey, whether you have a nonprofit or for-profit business, but I especially help people start nonprofits and raise money from the ground up. So in today's video, I wanted to share 4 things to consider when you are creating your salary, because you can't just create some arbitrary number. There needs to be some thought behind it. So I want to give you some parameters as you're trying to figure out what your salary is to help guide you along that process. And especially if you have a nonprofit, there are some special rules you need to know about. There are some special requirements that you need to be aware of. So I'm going to bring that up at the end of the video after I go through these 4 considerations. If you're looking for a community of people, of business founders just like you who need help getting funding, especially in the beginning, you need to join my Purpose Profit community. I am linking the sign up below. It is a membership community where you can get support, education, resources, and accountability as you are raising money for your organization. Now, before I go into the 4 considerations, this is one thing I want to talk about. I want to talk about a term called reasonable compensation. Now, the type of business that you have matters. So I just want you to understand that I'm talking in very general terms, but based on your individual circumstances, this may shift. But I'm trying to give you like some basic information so you know at least where to start. So what I'm going to be talking about today is from the perspective of a corporation. See, when you are a nonprofit, you are still, in most circumstances, a corporation. So this applies to you as well. But if you have set up your organization to either be taxed as a corporation or you have set up as a corporation, this is when this starts to apply. It is a term called reasonable compensation. So the person who is, especially the chief officer of the organization, especially if you're just the only person working in the organization, you need to make sure that the compensation that you set for yourself is reasonable. And this is according to the IRS. Now, they won't tell you a particular number about what makes it reasonable. And there are some theories out there about like how you should set this, but you just need to make sure that whatever compensation that you're setting for yourself is appropriate for the phase that you're in. Because the IRS does not want you skipping out on taxes by just saying, oh, I'm going to give myself a low salary and then take a draw over here and not be taxed on it. If nothing else, the IRS is concerned about the money that they can tax you for. So if there's any kind of indication that you're trying to get out of taxation, that is when it'll be a red flag for them. So just remember, when you are setting your compensation, it needs to be reasonable compensation. And I am dropping some links below to give you more information about what that really means. So here are the 4 things you should consider. The first thing is check the rules and regulations for the type of structure that you are, because every structure is different. So I'm going to use 2 structures as examples to tell you how different they are. So the first thing is an S Corp. So if you are being taxed as an S Corp, then there are some tax benefits to having that structure, meaning that you can take a distribution, that you can send money or draw out money to the owners of the corporation that you don't have to subject to withholding tax, meaning that money that you draw out, when you draw it, you don't have to pay tax on it. Right? There are some other implications once it hits your account, but I'm not an accountant. I'm not your accountant, so you need to check with them on this question. But generally, you can get away with certain tax-free money with an S Corp. But as an S Corp, if you're making enough money, you still have to set a salary for yourself. So that percentage of what you set, whether it's 60% salary or 40% you're going to take as a distribution, it just needs to be reasonable and it needs to be appropriate. And you need to understand the rules of S Corps and when you're supposed to be taking a salary, right? So if your business is profitable, then there are rules around you having to have a salary, like you getting paid through payroll. So the first thing you need to do is understand what your business structure is and understand the rules for your specific business structure. The second kind of business structure I want to talk about is a nonprofit corporation. Now, a nonprofit corporation is not subject to federal income tax, meaning everything that I just talked about with the S Corp doesn't apply because you can't take distributions if you have a nonprofit corporation. It is an independent business. You don't have any ties or like ownership to it in that way. So you're not entitled when you make a profit or you make some money in the year to get that money automatically to come to you. That money has to come to you in certain ways. And in most circumstances, if you want money from your nonprofit, you have to receive that as payroll, as a person who gets paid for the work. But even as a person who gets paid for the work, for example, if you're sitting on the board of directors, there are implications for that because that could be considered a conflict of interest. And in some circumstances, it may not be allowed. So there are so many rules around salary, but it depends on the type of structure you have. So my first piece of advice is first know and understand your structure, because a lot of people don't even know if they're a corporation, if they're LLC, whatever they are, and how they're getting taxed or if they're getting taxed. People don't understand that. So that's the first step. Know what kind of structure you are and know the specific rules for that structure, because every structure has different rules. The second thing you need to understand is what type of employee. The second thing you need to understand is what is your relationship to the business structure in terms of how you're going to get paid. Because in certain structures, you may be an employee, meaning that payroll tax is taken out of your check and you get a W-2 at the end of the year. And in some circumstances, you're paid as a contractor, whereas you get a 1099 at the end of the year and you're responsible for paying those taxes. In some circumstances, if you have an LLC and you're not getting taxed as a corporation, that money is just passing through to your personal income tax and you're not necessarily getting paid for the money that you make. You're not necessarily taking a salary, but you're still responsible for paying tax as if it was your money anyway, even though it's made in the business. So you need to be clear for yourself, what is your working relationship to the business? Are you an employee of the business? Are you a contractor of the business, or is there not really that structure at all? You're just making money because maybe it's like a hobby business and you're making a little bit on the side and you don't want to set up a formal structure of getting paid through payroll. Because here's the thing, when you decide to make the decision to be an employee of the organization, it introduces a lot of complications, and you can get certain services to help with this. So for example, Gusto is a payroll company that I use. If you're interested in signing up for Gusto, I have a referral link below. But you have to run payroll. You have to pay quarterly tax to the state and to the federal government. You have to take out the appropriate amount of tax. You may have to get insurance, workman's comp insurance. You may have to pay an unemployment tax with your state. And none of this applies if you're just a contractor, right? Or if you're just getting paid as a 1099, or if you're not getting any kind of formal salary. So the second step is understanding what your working relationship is, because that will have implications for how you're paid, and most importantly, how you're taxed on that money that you're paid. The third thing you need to do is investigate what your compensation will be. So you need to determine what is your compensation. And compensation is more than just money. Because I know, like, this whole video was about how to set your salary, but you also need to think about other pieces of that. And this is especially for people who want to go full-time with their business. Say you have a for-profit business and you want to go full-time. Well, you need to understand that it's more than your salary. It's also your health insurance. It's also life insurance. It's also other health insurance benefits like a flex spending account. All those things that you take for granted when you're working a job because it's kind of set up for you in most circumstances, that when you have to think about it for yourself, you're not thinking about it. You're just thinking about your money. But to be able to pay yourself or give yourself benefits also is a cost to the business. So you really need to do your work to figure out what is the true cost of getting paid and what is the appropriate amount for you to get paid and what is the appropriate balance of benefits. Should you pay 100% of your benefits? And if you do pay 100% of, say, for example, your health insurance benefits, then you have to do that for every employee that you hire, right? You can't pay all of your own benefits and then when you hire somebody, be like, oh no, I'm only paying 50% of yours. It has to be balanced. So these are the things you need to think about. But in investigating your salary, you need to think about, okay, what are my duties? What is my experience? What do I bring to the table? And that helps also set the level of your salary as well, because you want to compare to the market and see, okay, what's the market rate for the type of things that I'm doing based on the experience that I also have. So you want to look at the market rate. You want to look at other organizations that are similar in size, similar in your development phase, meaning how old your business is, and see how much their CEO or whatever role you're playing is getting paid. Do your research to understand and make sure that you're setting an appropriate level for your salary. You also want to think about your geography, because that matters. A CEO salary in New York is way different than a CEO salary in Montana, but it may be similar if you're both in urban areas. So you need to do like that background research so you can justify why your salary is set a certain way. This is really important for nonprofits especially, and I'm going to share more at the end of this video, why it's important for you to do your due diligence and to document that. And it's not just for you to do. And it's actually inappropriate for you to investigate your own salary. It's really for the board to do that. So again, you got to understand the rules and know what you're getting yourself into, and document. And the fourth consideration is having an agreement in place. So having some kind of documentation or agreement about what the compensation is so that it's clear across the board. Now, for some people who have a salary, and say you have an escort and it's just you, but you're paying yourself as an employee, and you may think, well, it's kind of silly for me to just, you know what I mean? It's just kind of silly for me to have an agreement with myself. But you have to remember that you're setting up a separate entity that's different from you as a person. So even though you are the person operating in the business you created, you still need to have the formal structures in place so you can justify the decisions that you make, and so that if the IRS does have questions about how you got to a certain point, that you have a paper trail that you can point to. So don't forsake documentation in your business. Don't forsake the required meetings you're supposed to have, the required agreements. So have a compensation agreement that lays out what your salary is, what your benefits are, and all of those things that are included as a part of your package. Maybe even you're in a place where you're giving yourself leave. And one of the reasons why it's important to do this has nothing to do with like the IRS, is that if you know you want to grow and you want to hire, then you need to set the standard. Because it becomes a different ballgame when you introduce employees. You need to have structure. You need to have clarity in your business when you have hires, when you have people who are working for you. So you start with yourself. You begin that clarity and have those policies in place for yourself first. And then when you begin to add more people to your team, then the structure is already there. So I said all that to say, have your agreement in place and be clear on what your compensation is and have that documented. Now, I waited to the end to particularly call out nonprofits because, that's what I do. I help people with nonprofits. But I wanted to call out some particular things that you need to be mindful of if you are a nonprofit founder and you're trying to get paid or have a salary. So the thing you need to remember is that you do not set your own salary. That is inappropriate. And most founders are the executive director. So I'm speaking to people who want to be the executive director, or sometimes called the chief executive officer. If you know that's what your role is going to be, the board is responsible for setting your compensation. The board needs to do that background research I talked about to figure out what your salary should be based on, the growth of your organization, based on looking at other comparable organizations. They need to set that. They need to have a meeting about that. There needs to be meeting minutes written down to document how they came to the decision, and you cannot be a part of that discussion and decision. Because it is a conflict of interest for you to set your own salary for a public organization. Because I'm talking to people who more than likely are running public charity nonprofits. And it's just a conflict of interest for you to just say, I'm going to set my salary at this amount. Even if you have the best intentions, which I know most of you do. But there still needs to be checks and balances, because you have to remember, it is not yours. You do not own a nonprofit. No individual owns a nonprofit. So that's something you just have to keep in mind. So make sure your board is documenting that process for setting your compensation, setting your package up, and make sure that that's documented in meeting minutes. And if there's anybody on your board who is connected to you, who's related to you, or who is in business with you, that potentially can be a conflict of interest as well. So if your husband is on the board and your husband is helping to set your compensation in a meeting, that is a conflict because that money goes to his household as well. So that person may need to recuse themselves as well, which then leads me to the last point, because I'm not going to go on and on about this because I have plenty of videos on this stuff. It leads me to my last point. If you only have 3 board members, and let's say 2 of those board members are related to you, and you need to start having these discussions about how you're going to be compensated, and you want to do things the right way, and you don't want to make it look like you're being nefarious with the money or you're being inappropriate with the money, how can you have those checks and balances when most of the people on the board, when you're a very small board, are related to you and have a conflict? So that's why you need to invest in having a board that's not just connected to you personally. You need to reach out to people who are connected to the mission and the purpose who you don't know, right? You need to have those checks and balances, and you need to have a big enough board so that you can have checks and balances, so that you can have fruitful and productive conversations, so you can make smart and wise and strategic decisions. Having a board is about strategy. It's about increasing your network, and your mindset needs to be there instead of worrying about, I don't know these people, I don't want them attached to my nonprofit. Because remember, it's not your nonprofit. All right, so I know some people hearing this probably are hearing this for the first time, and you're like, wait a minute, it is my nonprofit. I have a video on this that may help clear it up. I'm linking it above. But if you also need help, you need to join my community, because you'll get resources and training to help you navigate these kinds of questions. I'm dropping that link below, and you can also visit me at bossonabudget.com for more help. Thank you so much for watching, and I will see you in the next video.